Here are our trades for today. Today is Monday, June 26th of 2023. And we did a couple trades in both our smaller account and our main option trading account. First, let's review the HPQ trade that we did. It's a covered call. We did a covered call in both these positions. And the reason is that we don't get paid interest on our money in this retirement account unless we were to put it into an ETF, like a bond ETF. So because I tend to lean more towards covered calls, and this especially with getting some additional premium for selling covered calls because of the Greek interest rates. So first of all, we bought 100 shares of HPQ and sold it August 18th, $29 covered call option. Notice we went out to August, and these shares end up costing us $28.13. So if they're called away from us, they'll be called away at $29. So here we see our chart of HPQ. Notice over here on the hourly chart, just overall just a slight uptrend in this, which you can see a little better when you look at the daily chart here. Notice that HPQ is now trading just below the middle part of this trading channel. It's making higher highs, higher lows, and the strike price we sold is a $29 strike price. So if HPQ were to come down to that $29 area, then it'd be right in here, which is the area that's been serving as support for it. If it did that, we could also always roll this position out. Now notice our break even will be $28.13, so we really don't begin to lose money until it gets below $28.13, which would put it below this upward sloping trend line here. Notice over the past week, as the stock was dropping in price, the volume was dropping, so we like that. However, on Friday, we see nice, strong volume. So what happened? Well, I read that as most likely what happened is sellers sold it down and buyers came again and bought it up. And then today, so far, we still have a little over 35 minutes left till the market closes. We see that buyers have bought it up pretty good. Now, the volume is not that high, but again, the day is not over yet. Hope to see how the day plays out. But that's how I read that high volume, is that sellers sold it down and buyers started buying it up, which we see is pretty typical when it gets in this $28 to $29 area. So we'll have to see how it plays out. But either way, we're protected down to $28.13 per share, so we have nice room to be protected. If it's called away from us, then we end up getting a nice return. Notice over here on the weekly chart that over the past month, there was very strong selling pressure here, but again, the volume came partly from buyers. Sellers sold it way down this week and buyers bought it way back up over half the candlestick. It pushed it back up over half that candlestick by the end of the week. Next week was this area is retested. So this area served as support for it multiple times, and that's just above the area where our break even will be. So overall, good position. Let's see how it plays out for us. The next one is we did another covered call in Kroger, ticker symbol KR, sold the July 21st, $45.50 covered call. And these ended up costing us $44.93 per share. So if it's called away from us, then we'll be able to pocket the difference. And we'll have to see how it plays out with the dividends. But let's take a look at this chart here. So here we see our chart of Kroger. Notice it had a big drop going back here at the end of May. But since then, it's kind of been trading a little range here from 44.5 on up to a high right here around 47.5. Now looking here at our daily chart, notice it was a big high volume day and it pushed below where it's been finding support and well below our strike price of 45.5. Our strike price, our cover call is right in here. We've also sold some cash secured put options around 45 in our main option trading account. So that day it did gap down on high volume, but notice that the buyers did buy it up towards the end of the day. So it ended up in about the 75 percentile of that candle. But after that, it's been finding nice support right here around 45.5. So right about our strike price for our covered call option. Nothing really extraordinary going on with volume after that big high volume day. We see buyers coming in on nice volume, but it is hitting up against the green 50 and red 200 moving average on this daily chart, and so far has not broke out above it. I don't see enough volume to really push through there, so I expect it to kind of consolidate and maybe even trade down a little bit. If it trades down to this lower part of this upward sloping trend line, that'll put it at $44, which would mean that we'd be at a loss in this position. But if it did trade around 44, then we could easily sell the 45 or even $44 covered call option for August and turn it into a profit if it's not already. So I kind of like to think through what might happen and be prepared to adjust these positions if they go against you. Now looking over here at a weekly chart, we see a nice upward sloping trend line down here for support. However, we do see that the highs were getting a little bit lower. However, the high it made about a month and a half ago is actually a little bit higher than the previous one, going back here to April. So it did make a little bit of a higher high. Now I'll have to see how this wave turns out, if it makes another higher high here or kind of retest that area around 50. But either way, if it does, then we'll end up well with this position. So that's our two trades in our smaller account. Now let's move on to our main option trading account. We see first of all that we sold some cash secured put options to Starbucks. We sold the July 21st $96 cash secured put options for 98 cents per share. We'll take a look at our charts here. Notice that ever since, let's see, what was it, around the last few days of May, Starbucks has kind of been trading sideways. It did push above the 200 moving average on this hourly chart, but now it's back down to the support area right here around 97, 96, 98 in that general area. You can see a little better here. This is the area that served as support and resistance for it multiple times over the past year. Served as support for it back here at the end of May, beginning of June. Did it again right here in the middle of March. Did it again going back here to the end of last year in December. And then also going all the way back here to November. See, it served as resistance here. Then it turned into support once it broke through that area. So a really popular area for support and resistance, and it's now approaching that area. Notice Friday was a very high volume bar here. It was a down day. However, reading this and looking at the candlesticks, it looks like a lot, or some of that volume, I won't say a lot of it, but a good bit of that volume came from buyers buying it up as it reached this area where buyers tend to buy it. That's what's been happening over the past several weeks. And then today we still have about 30 minutes left till the market closes. Again, it's finding support right here around this area, right around 97.5, 98. And remember, the strike price we sold is 96, so it can still come down from where it's at right now, looks like about $1.50 before our $96 cash secured put option is challenged. Now going over here to a weekly chart, just again, we see that nice, clearly defined area of support. Will it push through it and come back down? Well, it might. And if it does decline from where it's at now to this red trend moving average, which will be the next major area of support, that'd be about a 6.5% move. And our $96 option would be in the money by around $5 or so. So not too far in the money. Should be enough we could adjust it. And again, we're not saying it's going to do that. We're just kind of trying to think ahead. What if it does do that? How will we handle it? And finally, our INTC trade. This is a position we've been in for quite a while. We're repairing it. And so we're in a covered call and a cash secure put option. And simply, we rolled both of those strike prices up as we rolled them out from July to August. So we bought to close the July 21st $30 put option and sold the August 18th $31 put option. Same thing with the covered call. We bought the July 27 covered call, rolled it up and out to August 28, and got a small credit of 11 cents per share. Let me show you why I did that. So we were assigned these shares a lot higher than we're trading at now. However, this cash secured put option, if it was assigned to us, which we're not trying to let it be assigned, but if it does, it will lower our overall cost per share way down from where it's at now. But we've been collecting really nice premium in Intel. So one reason why I wanted to go ahead and roll this now is because notice what happened last week. Intel had a really strong advance several weeks ago. Then it had a really nice decline. Right here, it looks like around 15%, but found support at these moving averages, which we would expect. So the question is, would it go lower and test this upward sloping trend line down here, or would it find support there? Well, at least for now, it's found support. So just in case it's going to keep going up from here, I decided to go ahead and take advantage of this opportunity to roll it up, roll the strike prices up and roll them out just 1 month. Because if it gets much higher, then we won't be able to do this for a credit. It'll end up having to be a debit, or have to go farther out in time to September, October to get that done. So since it came down to an area we could get it rolled up as a credit, decided to do that. Notice nice moving averages for support. Looking over here at the weekly chart, see it's at the 50 moving average where it found support. Nice buying pressure over the past month and a half. It was a big volume last week, but again, still over the past month and a half, pressure is dominated by the buyers. Looking at this hourly chart, see it's riding this 200 moving average of support. So all these told me that it looks like the most likely thing to happen for Intel is that it will keep going up, or maybe trade sideways, but it's bouncing off this support, so that does look pretty bullish. So that's our trade for today. I'll be looking for some new opportunities tomorrow. I hope you have a great evening.